Hi, everyone. I'm Rosemary Miller here with Stephen Ehrlich, the Director of Research for Forbes Digital Assets. Stephen, thank you so much for joining me today.
Yeah, thanks, Rosemary. Pleasure to be here.
So I read your story. U.S. regulators says that Binance illegally helped Americans trade on its exchange. And before we get into the meat of what that headline is about, could you tell me what really happened? So the CFTC, the Commodities Future Trading Commission, sued Binance, and there was a 75-page complaint. What was in those 75 pages?
Quite a lot. It made for a pretty interesting read. Just to begin, the Commodity Futures Trading Commission, it's kind of an esoteric agency. It is a national regulator, but basically what it does is it oversees derivatives trading for commodities. Typically, those are typical commodities are gold, oil, precious metals, produce, things like that. But within the world of crypto, if the exchange deems a particular asset, be it Bitcoin or Ether or Litecoin or stable coins such as Binance USD or Tether, which are mentioned in this report, the CFTC won't oversee the spot markets that underpin those assets, but it does claim to be able to regulate the derivatives markets. Those are things like futures contracts, options contracts, swaps, so on and so forth.
Mhm.
And those particular markets, they're bigger than spot markets, and in many ways they provide a needed service of creating price stability, price awareness, and just helping certain traders with hedging strategies and so on and so forth. But they also allow traders to trade on margin, which basically means they can borrow funds in order to turbocharge gains or potentially losses. And it's a pretty highly regulated industry, or it should be. So
Mhm.
for brokers or companies that facilitate these types of trades, they typically need to register with the CFTC as something called an FCM, or futures commodity merchant, which basically means that they're going to abide by a series of regulations to help ensure that they have enough, that they protect, I guess, customer welfare is the best way to put it. And in that 75-page complaint that you referenced, the CFTC basically said that since 2019, when Binance first launched its derivatives business, it had been servicing U.S. customers without registering as an FCM, and therefore there was the potential for a lot of I guess a lot of malfeasance or just poor outcomes for customers, depending on how the markets went.
But if I'm not mistaken, Binance isn't even supposed to be dealing with US customers, right? Because Binance has Binance US, and Binance US was not mentioned in that complaint, correct?
You're right, Rosemary. Binance.com, or the international exchange, is not supposed to be interacting with US customers at all. In fact, it set up a separate entity a few years ago called Binance US, which licenses technology from the main exchange and is also owned by Changpeng Zhao, better known as CZ, the founder and CEO of Binance. Now, that exchange itself offers a slimmed down selection of products. It doesn't offer futures or any types of derivative contracts. And in some ways, it has been controversial. In fact, one of our colleagues, Michael Del Castillo, a couple of years ago, published a story based on internal Binance documents, which alleged that Binance US was initially set up as what it called a Tai Chi entity, which whose primary use would be used to his primary use would be to distract U.S. regulators from the activities of the main international exchange that would still be trying to service U.S. customers.
Okay, so what
But
kind of
as you,
activities are you referring to?
when I say activities, I just mean offering trading services to U.S. customers.
Okay. Okay. And so what because Binance US wasn't even mentioned in this complaint, how is the CFTC, a US regulator, actually able to file a suit against Binance?
Right. That's a very good question. Binance US, although it was just casually mentioned because CZ is the owner of it, it's not mentioned in the complaint, and I think that's basically because they don't offer any type of derivative contract, which is what the CFTC oversees. But going through the complaint, I mean, in painstaking detail, they clearly got access to some of CZ and his chief compliance officer Samuel Lin's Samuel Lim's cell phones. I mean, they clearly saw efforts from those individuals to continue servicing the U.S. market, to basically do something akin to compliance theater, where even though they were supposed to geofence or block anybody signing in from a US IP address, they would typically just put up a pop-up window where someone would have to say, hey, I'm not from the US, and then they could continue accessing their account. And in other instances, especially for some of the high-profile VIP clients, individual traders or institutions, they would go even further in helping them to maintain access to their funds, continue trading on the platform, even sometimes helping institutional clients set up shell corporations in external jurisdictions so that they would hopefully not be would not fall under U.S. jurisdiction.
What's the issue with falling under U.S. jurisdiction? Like, why couldn't Binance have crypto derivatives on Binance US?
I mean, that is again a very good question. There are U.S. entities that have licenses to offer crypto derivatives to U.S. customers. LedgerX is, which actually had been bought by FTX, is one such entity that is able to do that. The Chicago Mercantile Exchange offers regulated regulated crypto derivatives to U.S. customers, and in many ways that's seen as a bellwether for institutional sentiment towards crypto. There's a couple of reasons why. I mean, for one, it takes a while to get one of these licenses. It can take years. It can be expensive. Now Binance, I'm not privy to all of their internal finances, but one of our other colleagues, Javier Paz, told me yesterday that his estimates are that Binance earned $17 billion in fees from crypto derivatives since their inception in 2019. So money may not be an issue, but perhaps Binance did not necessarily want to wait to go through the process, or maybe they felt that they were not going to be able to get licensed, either because of just general concern in the U.S. about Binance's activities. It's certainly a very controversial topic. In fact, the main exchange doesn't even have an official headquarters, even though CZ claims that the exchange has 16 different licenses across different national jurisdictions. Or maybe just the way that it's set up, that it was not likely to be approved as an FCM. I mean, there's a few different reasons why, we don't know, but all we know is that they are not approved to operate as an FCM.
Okay, and I want to switch gears a bit and talk about the KYC, which is also Know Your Customer procedures. I saw in your reporting somewhere that it appears that CZ, Changpeng Zhao, the founder of Binance, kind of wanted to bypass that. He didn't want KYC procedures on Binance. Why is that the case?
So maybe it's good to just start out by talking about what KYC is. KYC stands for Know Your Customer, and that's a pretty standard requirement for any entity in the traditional finance world or crypto that touches money, that touches finance. It goes pretty closely with AML, anti-money laundering. So they kind of go together. Anti-money laundering, Know Your Customer, regulations in the U.S. that's sort of operated under the Bank Secrecy Act, and basically it's a requirement that you need to know who is operating on your platform. Obviously, finances money can be sent around the world for a number of nefarious purposes, terrorist financing, drug dealing, all sorts of nefarious things that we don't want to have happen. So it's important to know who's operating on a platform, especially if you're touching the U.S. market. Now, KYC is not always an easy thing to do. It creates a lot of friction in the onboarding process. To do it properly, you need to get things like driver's licenses, other types of documents, bank statements, and then typically there's a few different tiers of KYC depending on how much volume a trader wants to participate in. So if one trader goes to exchange A and says, hey, look, it's going to take me 2 weeks to get onboarded here. I have to show 1 million documents. Maybe I don't necessarily want to reveal who I am. They're not going to go to exchange A. They're going to go to exchange B. That's going to let them register for an account with just an email, and then let them, which could be a pseudonymous email, and then let them attach a wallet. So out of fear of basically creating this friction that could cause many traders from a key market, the US, to go to other exchanges, it appears, again, based on some of the details in that complaint, that Binance essentially decided to forego a lot of those activities.
If I'm not mistaken, Steve, isn't anonymity, am I saying that right? Isn't being anonymous one of the main selling points of cryptocurrency anyway? I understand. I do vaguely understand why one wouldn't want KYC procedures. So why is it so forced upon in the US?
Right. And that, again, that's another important question. And this kind of speaks to a bit of a paradox that is within crypto. It is supposed to be relatively private, censorship resistant, so on and so forth. But when you're talking about centralized exchanges that, even more importantly, touch fiat money, fiat government issued money, typically that requires them to be connected to banks, traditional banks that operate and are subject to national regulators. That typically forces an exchange's hand to implement these AML KYC procedures.
All right. So switching gears a bit, going back to the CFTC suing Binance. Steve, what does this mean? What is the CFTC actually seeking from Binance? Just fines? Are they trying to arrest CZ and the chief compliance officer Samuel Lim? What's the goal?
Yeah, I mean, in general speak, they're looking at like forfeiture revenues, fines, and basically like bans on engaging in this type of behavior moving forward. I do have some questions about the ultimate impact of this complaint, because again, these are civil charges. They're not criminal ones like the Department of Justice can issue. Although the DOJ is reportedly investigating CZ and Binance as well. But I mean, I would imagine that the CFTC is going to try to get a fine. Patrick Hillman, Binance's chief strategy officer, has said in recent interviews that the company is basically preparing to pay fines to settle some of these outstanding issues. I don't necessarily know that they're going to agree on a dollar figure. It could be sizable. The largest fine that the CFTC ever instituted on a crypto company was $100 million on BitMEX back in 2021, and for a while, BitMEX, it's an exchange that still operates under new leadership. It actually created the entire crypto derivatives business, and when all these cases went forward, the exchange basically almost went out of business before it came back online. But I mean, I think that if you're talking about the CFTC's real concern, and yes, Binance is the largest crypto derivatives provider in the world, but if the bigger concern is to cut off access to U.S. customers for these unregulated derivatives providers, I'm not entirely sure what's going to happen, because even if Binance does implement proper geofencing around the U.S., there's plenty of other suitors that would step up and try to fill that void. They may not offer the same type of performance and matching engines and latency, or low latency, that Binance offers, but traders are going to trade, and there's going to be someone trying to fill that market. So I think this speaks a little bit to a bigger issue of just trying to find a way to come up with an appropriate regulatory architecture for crypto in the U.S. and around the world in a way that's synchronized. Because right now in the U.S., I think it is a bit anomalous to how some of the other countries, especially developed countries around the world, are approaching this industry.
Right. This appears to be another form of regulation through enforcement in a way. We've seen the SEC do this. And if I'm not mistaken, Binance has a few other investigations pending against it. Could you tell me about those?
Yeah, and it's hard to know the exact details of them, because they are typically agencies that are conducting these investigations won't speak about them until they actually present their findings in court. But I mean, the SEC, the Securities and Exchange Commission that looks into securities, is reportedly investigating Binance stemming from its 2017 ICO, which stands for Initial Coin Offering, kind of like an IPO for crypto. That was very popular a few years ago as a way of raising capital without having to go to venture capital firms by selling tokens on the open market. Binance's token is called BNB. It's one of the largest in the world, and the SEC is reportedly looking into whether or not that constituted an unregistered securities sale. So there's that. The DOJ is looking at them as far as like violation of the Bank Secrecy Act and what we talked about earlier, AML KYC procedures. Those would be criminal charges that could theoretically lead to jail time and some of the other penalties that Sam Bankman-Fried is currently facing, but a big difference here is that Changpeng Zhao is not a U.S. citizen. He's not based in the U.S. While Sam Bankman-Fried agreed to extradition, even if CZ does get arrested, it's hard to imagine that he would actually get extradited to the U.S. to face these types of charges.
Right. So zooming out a bit, do you believe this is another case of the U.S. simply trying to crack down on cryptocurrency?
No, I don't think so. Though the rules of operating as an FCM in the U.S. are pretty clear. And if all these charges are true, and again, this is just the complaint, Binance will have a chance to respond. It seems pretty black and white that Binance was operating in an unlawful manner. And that is the type of behavior that I think everybody in the crypto industry wants to see stopped. Most people want clear rules of the road, clear guidance so that they know how to operate in a responsible and regulated manner. And again, if these charges are true, it looks like Binance was egregiously flouting them, which is not something that anybody wants. In fact, I mean, the CFTC, there is a bit of I guess, a tug of war going on between the CFTC and the SEC regarding which agency should have regulatory primacy for this entire industry. The CFTC feels that it should be able to especially look at derivative markets for some of these underlying cryptocurrencies like Bitcoin, Ether, Litecoin, so on and so forth, because of their opinion, they are commodities. The SEC, especially Chair Gary Gensler, believes that pretty much every digital asset, with the exception of Bitcoin, is a security, which means that it would also oversee the derivative markets of those contracts as well. And I get the sense from speaking to numerous people in the industry that they favor the CFTC's approach. I mean, obviously, because of Bitcoin and crypto's decentralized nature, that's kind of anathema to being a security. So if the CFTC does get primacy, that would at least be a de facto assessment that many digital assets are not securities. So I think that again, people in the industry see the CFTC as taking a more nuanced and fairer approach to regulating this industry. And with kind of that background, I don't see this as a case of the CFTC really trying to regulate by enforcement or use enforcement to set key precedents. I think they really they've been looking into Binance reportedly since 2021, and I think that just now's the time where they were able to present their findings.
And so while people may favor the CFTC over the SEC, realistically, does the CFTC have the bandwidth? We know the SEC is a much larger regulator. Do they have the bandwidth?
That's a good question as well, and depending on who you ask, you'll get different answers. I mean, I've spoken with CFTC Commissioner Caroline Pham a few times, and I even asked her that very question, and she seems adamant that the CFTC has the bandwidth to monitor this industry. But that said, there is a bit of an arms race going on between the two agencies. The SEC is actively scaling up its crypto team. The CFTC is looking for funding to do the same. And to be perfectly honest, I think that there's a scenario where both agencies have roles to play. I do believe that certain assets like Bitcoin and Ether in particular are sufficiently decentralized to be commodities, but there are plenty of other tokens out there that I'm a bit more sympathetic to the SEC's view that they are securities, and those are certain decisions that will either have to be made in courts or through Congress. But I see a world in which both agencies have important roles to play.
And finally, Steve, what exchanges should customers feel comfortable trading their funds? Because we've seen the collapse of FTX. We're seeing Binance having all this scrutiny around it. Where can customers feel safe?
Yeah, that's again a very good question. I mean, when the complaint was filed in a district court in Chicago yesterday, Binance saw some big outflows, again, just because of concerns about what that would mean for Binance. For the most part, I still recommend that traders, again, especially in the United States, Coinbase right now remains the only publicly traded U.S. crypto exchange. Now, of course, they received a Wells notice from the SEC last week indicating that they're likely to be subject to an enforcement action at some point in the future. But at the same time, they have audited financial statements. They've operated for years. They have the transparency that comes from producing regulated or required quarterly and annual financial statements. Kraken is another exchange that has been in business for more than 10 years, and I find to be reputable and trustworthy. Gemini is another one that has a number of licenses, has undergone SOC audits, which look at certain compliance procedures and policies. But at the same time, one thing that I always say to investors is to never keep all of your eggs in one basket, because you just never know. An exchange could get hacked, an exchange could prove to be insolvent, and it's just never it's always important to be able to spread out your funds so that you have options in case something cataclysmic does happen to a financial services provider that you do business with.
Thank you so much, Stephen.
Great. Thanks for having me.